Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Finally, let's take a look at the Bitcoin market. So on the longer time frames, we do not have really big changes. The market is still calling around the 50 even area. As we said, this is a rather significant resistance and stands on the monthly chart. That's why reaction will take some time. So it will not happen really fast. Besides, market could fluctuate around it, even reaching some high standing levels. For example, as you know, on a daily chart we have the butterfly with the extension around 55. So from that standpoint, the reaching of the 55, it will not be the breakout yet. So it's just wide range of the 49, 55 areas, so where market could fluctuate, and then we will see what will happen. Right now on the monthly chart, we do not have any significant changes. Market just stuck with the yearly pivot resistance one, reaching the XOP and stands flat. The same we could say on the weekly chart. It's mostly the same picture that we have in the last report. Market is not at overbought right now, but resistance is really strong. Most interesting and tricky things stands right now on the daily and intraday charts. First of all, if we take a look on the daily chart, at first glance we have bullish context by the few reasons. We have very strong upward thrust. Whilst market has reached the 127 extension of the butterfly, we do not have any meaningful reaction to the downside. So market standing just flat without any significant pullback. So even nearest 30% level has not been reached on this retracement. And that's later you can see bullish grabber has been formed, suggesting that market could keep going higher in extent of this top. And who knows, it might become the action to the next extension that I just mentioned, 55 area. It's 1618 extension of the butterfly. At the same time, if you take a look at the MA here, moving average, you could see that we have a kind of the double repo pattern. At least nominally, we have great thrust up. This candle we have close below the 3x3. Here we have close above, and this one we have the close below. Potentially, this is bearish reversal pattern. Yes, it looks not really perfect. Some kind of we do not have any classical features of the double repo performance, but nominally we have it, and this makes decision making really difficult, because in what direction here we have to trade. Either we should follow with the grabber and overall bullish signs that we have, or we have to sell, dealing with this double repo pattern. If you take a look at the intraday charts, you'll see there are more bearish signs, more bearish performance. On the fall time frame chart, they are not visible, because here we just have the sideways consolidation without any big, actually, some important patterns or something. You could treat it maybe even as a double top, who knows. But currently it seems just a sideways action. But if you will take a look at the performance of the market for the hand and shoulders that we intended to trade last time, here's how situation was developing. First, we've got perfect forming of the right shoulder and the points that we have specified. And then we have great upward reaction. So in general, hand shoulder starts working really nice and breaking the neckline. But suddenly it stops, making minor wash and rinse of this previous top. You can see just slightly stops have been grabbed here and market collapsed. So currently this hand shoulders has failed. And potentially it means that market should drop below the head. This performance stand in favor of the double repo pattern, although it doesn't look perfect. So this performance on the hourly chart I would call as a bearish, but at the same time we have some bullish patterns as well. So it means that if you're not sure, or these contradictory patterns really makes you feel uncomfortable with the trading process, it will be better to wait for the clarity and do not risk too much with the taking positions that you are not comfortable with. If you feel okay, so it's normal, you could try to apply some more advanced tool for entry. because if you take a look at the patterns, you know that we have the grabber here and with the invalidation point below this low. So it means that if you would like to take the long position, you just need to minimize your risk. You have to take it as close to the lows as possible with the placing stop below this area. This is first moment. Second, you could make the bet on a failure of the double repo. In this case, you could use stop buying order near the top, somewhere around 52.80, for example. Place the stop buy order. If market will reach this and market start challenging the top, you're step in. Your order will be filled. If market will not reach it, drop down, it just remains unfilled. So that's the attractiveness of the stop order. The same is true for bearish pattern. If you believe that Bitcoin starts dropping and you would like to make the bet on a double repo pattern, you need to take position at some resistance, probably 618, somewhere closer to the invalidation point, right there. And also you could use the stop sell order instead, somewhere near the lows. If double repo starts working, market starts dropping, you will step in right there. You could combine both orders. You could choose what you would like, more limit order or stop order. But this is a bit advanced tactic. So, it is very versatile, because you could combine both orders. For instance, you could take the short position and use stop buy order above this area, and so you could use the multi-directional orders depending on what market will start forming. This is a bit advanced approach, but anyway, currently we need some more clarity to decide in what direction market will fall. At the current moment, based on what we see, personally, well, I think that the conservative way it's to wait. It's just see what will happen, what reaction market start forming. If you still would like to take the part, you could follow the suggestions with the orders that we just have described.